Okay, hello everyone. It's been about a couple weeks since I made my last video. I wanted to just jump in here and do a quick one. It's been really busy on my end with family, work, and on. So other priorities take take more importance in these days. But I wanted to do a quick chart of the day here, and I wanted to do one on MongoDB. I did one a while back for CrowdStrike, and I think that was pretty received very well on Twitter and my channel YouTube. So I'm gonna try to make these more often, but again, it's just extremely hard to be able to do so with other responsibilities that I have. So let's dive in quickly. We'll just go through the weekly chart, talk about why I like it, and then we'll go from there. So let's dive right into it. This is disclaimer. Please do your homework, your own due diligence. This is not investment advice, not recommendation to buy, hold, or sell any securities. Let's dive in. We'll jump in straight into MarketSmith. MarketSmith, take a look at some fundamentals here before we jump in a little bit more to the technicals. So obviously in the software database space, MongoDB has AI related theme here. You see the stage 2 back in 2020 heading up, and then you got, just like many growth stocks, down sizably in the bear market that started in 2021, and you have your first kind of attempt at stabilizing. This is your downtrend. You break that downtrend. This is your potentially stage 1 forming after the bottom here, and then now you're clearly in a stage 2 uptrend. Okay, so technically we're in stage 2 uptrend. This is stage 1, and even according to MarketSmith pattern recognition, and this is a cup stage 2, 18 weeks, 27% deep. That's really ideal. That's what you would like to do or like to have. We're getting pretty close here to previous highs. What I like about this is really the accumulation that started at the bottom right here. So the big tail that we bottomed. And then from there, really, when you have the sell-offs, you have volume drying up on the sell-offs, and then you have volume increasing on the rallies. Again, forming the right side of the cup, and then you have volume drying, and then on the rallies on the blue, you have blue spikes. So accumulation looks good. I like it. You got the 2024, 2025, the company became profitable in 2023, and then massive estimates for 2024, and then also continuing into 2025. Estimates being revised down, so keep watch of this. The group is really strong. Let's take a look at how the stock doing relative to its group. It's number 1 from an RS rating perspective, number 1 from composite rating perspective, and then not really from an EPS or others, but this compared to the rest of the group. Here's the green line, just relatively start outperforming the group, outperforming the market. 98 RS, double-digit sales growth constantly for multiple quarters, and like I said, just came profitable here in 2023 from a yearly EPS. So a lot coming together for the stock, and now it is 1, 2, 3, 4, 5 up weeks, straight up from the bottom, is what O'Neill calls this. Breaks the downtrend of the cup right here, and then start heading back up. We're looking for consolidation. Potentially what this could do, it could just potentially break out and then pull back and then moves up, right? Let's do that again here just to show it a little bit. So option number 1 could rally up to the 500 level, pull back a little bit, and then rally back. What that would do is will give the 10 MA some time to catch up, and then potentially support the stock at some point up here. Okay, if you remember crowd, that's exactly what really happened. Consolidated, and then broke out, pulled back. The 10 MA, 10 moving average caught up with the price, support, and you buy it, turn it back up. I just linked to the video that I did a while back on CrowdStrike. So that's option number one, or one scenario that could happen, right? Scenario number two is we pull back here and give us a handle, okay, and then that would get the 10-week MA to catch up. Option number two, or option number three, is just does this, right? All options are on the table, and then you just have to watch it and just stay aside. And then option number four, this does this, right? So 4 options, all what you can do is, or 4 scenarios, all what you can do is sit, wait, and observe the stock on a daily basis. So it's showing a cup on the weekly. On the daily, with the pattern recognition, it's showing cup with handle. We'll go to TradingView here, take a look at it. Cup with handle. Also, I mean, looks great. Yes, you could have bought it coming out here if you wanted to, but I'll show you where I bought it. And I've been kind of talking about this stock for a while on Twitter and posting about it. So I'll show you the multiple different points where you could have bought it. So with that in mind, technicals on the weekly and then the fundamentals out of the way, let's go over to TradingView and take a deeper dive at this here to see how it looks. So here's your kind of technical picture here, right? Here's your downtrend and consolidation, and then you see your unbalanced volume made new high before price, or new high here, new high before price. That's really put the bottom in, right? So if you look at, it doesn't always work, right? So here making new high before price from an unbalanced volume, rolled back down with the market, new high before price, rolled back down with the market, really got hammered here. It's just like accelerated selling, right? So this is wave 1, wave 2, wave 3. And that get the bottom in, and then you got your consolidation, and then you start seeing green, right? So red, and just go back here. This is why I created this indicator, right? So you see a lot of red on the volume, and then here you start seeing a lot of green, right? So this is looking also potentially like a big head and shoulder bottom. It's a huge multi-year head and shoulder bottom. But I don't look at it like this. I don't look at large patterns like this. I would rather take a look at this as a cup, or a cup with handle, like Mark Smith was showing it. But it's really all semantics. I mean, you just need to observe price and volume. Your unbalanced volume is pegged at the high. Okay, so accumulation, it's not going down, right? So that's accumulation. You're showing relative outperformance for the market here. There's some period of just sideways here, so not much going on. And then here you start outperforming, going from here up. But I did post about this when it was setting up like this, right? So you get your wave 1, wave 2, wave 3, and now you're kind of consolidating here. You're not going down, and then you gap up above the 50, above the 21, and then you get this confluence of downtrending and horizontal. You could have bought it here. I should have. I didn't. I spoke about it when it was setting up exactly right over here. You could have bought it coming out here over the high right here, and then that would have worked, pulled back, and this is exactly where I bought it, right? And the reason why I didn't buy it here, I mean, again, I'm stickler to stop losses, right, and tight losses. So I bought it here. Why didn't I buy it here? Well, it was still not clear that I made the turn, right? Because it's still lower lows and lower highs. So I didn't buy it here, and and then really the other thing, it was still going to be a wider stop for 5%. I mean, it's not that wide, but I like them to be tighter than that. So that was about 4-5% stop if you buy it coming out here. So look, compare this to this where I bought it coming out here, right? This is pullback buy. If you do that, right? So I bought it right here. You know, that's 2%, 3%, right? So you're buying it, pulling back and turning back up. Your thesis that this is the low, this is the low of the turn, and if the stock goes below that turn, then your thesis is wrong, and your reason to be in the trade is invalid, and you have to exit because you took the trade with the assumption that the low, short-term low for this swing down is over. And if you are proven wrong with the price going below this low, then you need to be out. Otherwise, you're not sticking to your rules. So that's exactly what I did. And, you know, I have this dotted line here with previous resistance. You see it here, you see it here, you see support here. And then you see how it was resistance over here. And I wanted to add to it here. And this was beautiful add here. If you saw my video from a couple of weeks ago about add-ons, this was a beautiful add-on right here. But I didn't add because earnings are coming next week. And if you add here, then your average purchase price is going to be up here. There's really not a lot of time for you to get some cushion. So, and then it gapped up here. I think that was on Snowflake results. It's in the same space, gapped up to the previous high right here. Let's just highlight that. Okay, previous high. And then I sold half here. Let me show you where. I think it was like at 35. I think I sold, whoops, delete that. Like somewhere over here. Sold half at the open. I think it was at the open or maybe just a little bit after the open. I can't remember. It was around 35, 36 or something like that. So, and then it sold off. That acted as support again. I don't buy them falling. This obviously looked scary, right? So let's just take this day out. Did you know that it's just going to bounce the next day? No. It's all what you know is that this is reversal at high volume. You would expect high probability that the stock is going to go down a little bit and consolidate, but instead it just kind of reclaimed all of it the next day, and that's fine. I still have the other half. You know, can it just rip from here and break out like I showed you on the weekly? Yes, there's 4 scenarios, right? So one of the scenarios that we just talked about is that this pulls back here, right, and then gives us something to work with, or continue to go up and then gives us something to work with here and then go up, right? So still have half of my position. Earnings is coming, and then that's it. So it's guys, you gotta figure out why you're taking a trade, why you're not taking it here, why are you taking it here, right? It's not blind, right? It's not just shooting from the hip. There's a reason. There has to be a reason for everything that you do, for every buy that you take. There has to be a reason in your head, and then a scenario where that reason is not valid anymore. Okay, that's what trading is about. There's a thesis, there's a scenario in your head, and when that scenario is proven wrong by price, then you exit. You don't argue with the stock. I've studied the stock previously, and this is like a big cup with handle as well, if you look at it from a very multi-year perspective. But I studied the IPO on this stock when it came out. And then you see here, there's a really nice IPO setup. Again, you guys hear me always say I need them to break the downtrend and give me a pivot, and this did beautifully that back in February 2018. You see how this looks. This is a just beautiful setup, right? So breaks the downtrend up and then just gives you that pivot here, and then you buy it coming out here. It just, I mean, this is picture perfect. Oops, what did I do? Let's go back. Okay, so that gave you a really good setup there from an IPO. And then what happened? You run up. If there's the IPO base, you break out here, and then you pull back, but you pull back kind of violently down to the 50. So that's the first test of the 50. This is why I don't buy. I'm falling down. So here's your breakout from the base, right? So let's just gonna do that quick here. So here's your base, here's your high, IPO high, then you pull back. You're pulling back to the 50 for the first time. This is high probability trade, but you're pulling back. It looks gently, right? There's this high volume here, but if you see what happened here, there's this pullback never triggered, and this is why you want to wait for the pullback to trigger. Because look at this, right? This is the 21 MA, and this is your 50. So if you're waiting to buy the 50, lower. So let's do that. Lower high, 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 lower high. It really never triggered. So you should have never been in this trade. You want to wait for it to turn back up. And now when it's all the way down here, it's just becoming a little bit more not normal. Stock should have not done this. You want to buy it falling, crashing, you can do that, not me. So then you kind of look at it and say, okay, where would I buy it now, right? Well, so now what's doing really, it's just building another base, right? So how deep is this? Okay, this is not a pullback. 30% is not a pullback. 30% is a base. Okay, so this is building a base now, and now you just want to wait for it to build the right side, right? So now you have a base building after a strong move up. Here's your one, and then now you have your up really strong. So now you have your V, right? Back to the high. Okay, so back to the high, and you have a V. Oops, let's do that. Let's just do freestyle. Okay, you got a V. So now you just need to figure out where is your low risk entry. There's no risk entry here. There's no risk entry here. The best way to do this is, here's your strong move. The selling is done, and then you got your pullback. And here's where you turn back up, and then you buy it there, right? So how do you know that this is a good pullback? Well, let's just replay that and then take a look at it in real time, okay? Strong volume coming up in a V-shaped form, okay? And then this bottom is scary, but it's expected at previous high. But look at the volume on this bar, right? And then look at the volume on this bar right here, this bar right here. Volume dry up. What does that say? No more selling. There's buy-in, pulling back, no more selling. And this is your classic pullback buy. Down 1, 2, 1. I mean, there's no lower low here, so just kind of rounding up right here, right? Rounding up. I don't know why this is like wrapping. Yeah, and then you just take that coming back, and then you're good to go. So I wanted just to show that quickly. It's interesting to go back and kind of look at these stocks and see, because I try to study them a little bit. You always learn something. So hopefully that was helpful. This chart of the day, we'll see how MDP is looking. If we stay up here, so when I sold it again. Let me do that quickly. Use my tool here. My stop was below that low there, so I sold it up here. So it was 1, 2, 3, 4, kind of a little 4.5, 4-ish. Risk to reward. X of my risk, right? And now I am up. What is that? So most likely I'll hold through earning. We're up 10%. We'll see what this does. I'm hoping that it will stay up here and tight, and then you have 10% cushion as you go into earning. But this is a half position for me now, so damage has been controlled anyway. Unless we crash before earning, most likely we hold in that, and then we'll see what scenario plays out. 4 scenarios. What scenario plays out, and would any of those scenarios give you low risk entry? That's the key, right? Low risk entry. Why didn't I take this and I took this? Because this was a much lower risk entry than this one. Why? Because now it's already proven that it made the turn here. Did not prove that it made the turn yet. It was a wider pivot, tighter pivot. That's why this is a lower risk entry compared to this. All right. So hopefully that helped. I think I'll end it here. It's a little bit longer than I thought it would go. And now I'll talk to you guys soon. Bye.